welcome to today's Felton Trading Educational Learning Session. Over the next few minutes, we're going to cover some of the signal entry types that we see numerous times every day. And we'll be using the Felton Trading Suite for NinjaTrader for our computerized entry signals plus our exits. We'll have some very accurate filters that we'll easily apply to all signals before taking them. And today I'll demonstrate a couple of those filters for you and how we use them. As we enter and exit the various entries that the NinjaTrader Suite identifies, we'll discuss the power of divergence and how to harness it, the mastery of momentum and how to best put it to work for you. And today we'll be discussing how to trade with or against the trend. Using a couple of tick charts, we're going to show you our four signal types, the basic and the extended for going counter trend, plus the hidden divergence and our lump trades for trading with the trend. Any time or tick chart will work, as will applying this system to any market that's moving. Let's start with basic divergence. Its structure has a simple three parts to it, using only price and two simple but nicely tuned oscillators that we call the cycle in green here and the trigger in yellow. Additionally, you'll see some red and blue lines on red and blue background, and that's our momentum indicator that often tells us exactly when and in what direction the market will move. When we couple that with a signal, well, let's just say that trading begins to be a whole lot of fun. Basic divergence is designed to show you when a trend is over, and there's reasonable potential to take a signal against the current trend direction. For a basic divergence to form and trigger a market entry, the market must make a double bottom, where price hits or exceeds the same low twice, and if we're expecting the market to go up. Conversely, both the cycle and trigger indicators must form higher lows as we look from left to right. Price goes down, and the other two indicators go up, and that's divergence. In this potential signal, the market has made a nice double bottom formation, while the yellow trigger and the green cycle are still potentially going to make those higher lows that we need. We want the best entry possible, so we'll not wait for the green cycle to turn upwards, but the bottom yellow trigger indicator must turn up to trigger the signal and the entry. Now we have everything in place with the trigger up and the higher low formation, with the cycle giving us the potential for the higher low. Well, the trigger signals and we hit the buy market button. NinjaTrader allows us to enter the market and have our stop and profit targets automatically set for us. Today, for brevity, we'll just go for 1 point. Now that's 4 ticks in the ES, that's the S&P 500, with our stop set just below the corresponding price low to the signal entry. The stop determines exactly how much we'll be risking on each trade. Our physical stop is adjusted to 1 point below the entry position at 1077.50. But we'll exit immediately if any subsequent price bar closes below our trigger bar's opening price, which is 1078. That's actually a very tight stop, potentially only about 3 or 4 ticks. Well, it only took a couple of minutes for price to reach our 1 point target with the 2 contracts, and our profit total for this trade is $100. Okay, reviewing the structure of a buy signal, basic divergence, we have a double bottom in price shown with the yellow line. And then we have the higher low on our cycle indicator in green, and we have the corresponding higher low on the trigger indicator in yellow. Now let's take a look at our next type of signal called extended divergence. Extended divergence signals, or EDs, are generally quite large, sometimes taking almost an hour to form, and they may have several other signals within them. We call them extended because we extend the divergence across a small number of minor lows in between 2 major ones. Well, this is a sell signal, or short, meaning that we'll profit if the market goes down. Our trigger will be when the yellow trigger indicator turns down with a red bar. In this trade, it appears the green cycle indicator will also be turning down, but that's not necessary to fire the trade. This chart is a 150-tick ZB, which is a symbol for the 30-year bonds, and each tick is worth $31.25 per contract. The signal does fire, and we enter with a fill price of $119.27, and our stop is placed just above the corresponding price highs to the entry. Our target will be 4 ticks, and if we're successful, we'll be enjoying a hypothetical profit of $250 using just 2 contracts. Well, the structure of an extended divergence short is actually the inverse of a buy or long signal. Price makes a double top. The green cycle will make a corresponding lower high from the left to the right, shown here by the yellow line, and the yellow trigger indicator will be making a lower high also. Okay, let's sit back, relax, and watch this trade go to completion and hopefully hit our profit target. And there we go. And watch those MC bars for the bearish indication we get from those. Well, the signal is complete with the exit fill, and we once again have no position in the market. And one of the things that we often do in our live market trading room is to establish likely targets using a 50% Fibonacci line. With our $250 in the bag, we sit back and wait for our next trade, which we call hidden divergence. Well, hidden divergence is a powerful yet very simple signal to identify, but it does require some training in order to filter out the weak signal. There are only 2 parts to an HD signal involving price and the cycle. The yellow trigger has really no structural participation, but it does serve to trigger the trade entry. Price goes lower in the downtrend and the cycle goes higher. That's pretty simple, huh? Well, this is a short and the MC indicator is down and it fires. Now we trade it just like any other signal. We adjust our stop and here a 1-point profit target. And quickly we're filled with another $100 in our pocket, and now we're off to find our final signal type we call the lump trade. Strange name, isn't it? Lump trade. Well, it got that name from what it does to our price channel, which constantly tracks and engulfs price throughout the day. The core strategy of a lump trade is identifying a failed retracement, but you can't tell just by looking at price. In a downtrend such as we see here, price simply drops lower than it pulls back, but it stair-steps in practically every trend of any significant length. If a bullish pullback in a downtrend is identified as weak, or if the sellers are just particularly strong, the Felton Trading Suite for NinjaTrader will usually identify it and show us the precise moment to enter the market. And just now, it signals the trade, and we fire a short with a fill price of $10.4850 in the ES. The stop is placed at 2 points initially, but we quickly adjust it tighter according to the relationship between the fill price and the price highs. We choose $10.4975 for our stop. Now we just let the trade work, and if it wins, great. If it stops out, well, very little damage is done, and we can quickly recover in a future trade. Now the trade goes to completion, and again, we make our $100 profit target here on what we call the lump trade, a signal unique to Felton Trading. Well, we'd like to invite you to our live market trading room as our VIP guest for 1 week absolutely free. There you'll see many dozens of signals just like these all day, every day, and you'll also see how we trade them. Most of all, you'll learn how enjoyable and simple reaching your goals can be with the Felton Trading Method and the FT Suite for NinjaTrader. Well, thanks for watching, and we hope to see you in the trading room soon.